which is kind of what we did up here, right? Like that whole hour or so that we spent just trading right here. This is where the market maker had priced put options at the beginning of the day, right? So all the put sellers that got blown up this morning, this is where they needed to like net out, right, to price in their risk. And then, we failed after that. That does imply that we could get a continuation tomorrow to the downside, at least if nothing else, another test of GN. Which has probably now risen a bit. A failure of GN, then we could start to move into that like 56, 69 range that I discussed being so important this week. What happens at 56, 69 will probably determine like the next couple weeks of price action on the SPX. Futures managed to hold the long-term support and to close here, but we did slip it on the intraday. This highlights the importance of the 57. This should actually be at 33. 57.33 level, but right, that's where I have it on WeBull. Yeah, 57.30, 57.33.50. There. But another failure of 55 is going to reopen that for another test. Obviously, this is like a bear flag. It's not super bullish. And although we did get an initial failure, we may get another one possibly in the overnight session. I don't think there's any super important data here. We got Japanese consumer confidence, which might have EU unemployment in the morning, which could end up strengthening the dollar if it's worse. I think 8:15 a.m. we get ADP employment change, which if it misses or hits by a wide margin, it could be really important. Um, it looks like analysts are kind of all over the place on it. Some are forecasting like a drop to 90K, others a bounce to 120. So yeah, I mean, if it hits either of those, that would probably have some impact in the pre-market. But the intraday, not much. Just a bunch of Fed speakers. I don't think anyone's going to say anything too shocking. Obviously, we have some escalation between Iran and Israel that kicked off today. That's uh, been a big driver of oil prices. We saw a huge spike in commodities. Commodities futures shooting up to like 105. So a little bit of possibly shorts getting squeezed out there, but ultimately it ended up closing up the day 150 points, which isn't too crazy. Oil up 327 BPS and back above $70 a barrel. Gold, silver, copper up, agricultural commodities rising. Industrial metals are still down. We've got yields falling well across the entire curve, but a little more strongly on the mid and back end, so like the 510 and the 30. With the dollar rising, dollar back above 101.2, which is a major support level. Um, Correlation starting to break down. We're getting got a pretty big move up in correlation today after a few weeks of it slowly grinding lower. So some of the short vol in the index breaking down, some of the long vol in the underlying securities also breaking down. Forward yield on volatility picking up with that, now at negative 5.45%. Still not positive, but rapidly moving there. Yesterday's close was down around negative 11%. So bond vol moving up a bit alongside correlation. Skew continuing to fall. This is a pretty bearish signal. We should check it every day. Skew continuing to fall, but still, way the above like average, right? So it's got a long way to go down before it gets remotely bearish. 75.9 for F. Oh, sorry, skew. Which one did I miss? All of them? Yeah, whatever. Here, you guys can look at them. 74, 5.94% of the S&P above its 20-day moving average. And correlation between VIX, cash VIX, still breaking down on the daily, but increasing on the weekly. So, yeah, I mean, that's starting to signal a little bit of a spike in vol. They're fighting back against it, but it's not working. VIX up 15.55% today, and VX up 8.62. Pretty sure we slipped into backwardation briefly today, and the VIX 3 month is in backwardation, which may be way more significant. I don't know if that is a Fed Fund futures roll. I'm going to assume it is, but pricing in 0.465 rate cuts into the beginning of 2025. So does this matter? Yes. We've actually now rejected off of the top of the diamond here. We still haven't broken that 50. I'm gonna highlight this because it's so important. We still have not broken that 56.69 level from the prior month. That's the prior all-time high. The first test of that, I think, could be bullish, right? So, like, I kind of think what can happen here is, we move down over into the back half of this week, right? But then we find buyers here, and then we bounce, get a lower high, and then fail. I think this outcome is more likely. But with the longshoreman strike and everything going on right now, it's possible that nobody wants to come in and buy that dip, right? We just keep dropping. So the behavior of the index as we test that level is going to be really important. If we immediately bounce back to 5,700, we probably got another couple weeks of like, or at least another week of like, bullish breakdown. As lower high is realized and those bulls get fucked. But if we just kind of slam through it and test the EMA 30, we're probably not going to find any buyers. We'll just keep breaking down. So I could see us actually like breaking down here, right, into November, and then getting another end of year rally, but and then like Q1 25, whoop. But things are bad enough right now that we might not need to wait that long, right? Unless there's some resolution to the longshoreman strike. That's that's the Fed and the bond market's worst nightmare, right? All right. Anyway, thank you guys. Everybody have a lovely night. I'll see you tomorrow. Hopefully on time. I'm starting to feel quite a bit better. So just had to get some sleep, I guess. Thanks, guys. All right. Later, everyone.